Welcome to the Home Stagers and Designers on Fire podcast, where we help you attract more ideal clients, up-level your business, make more money, and still have a smokin' hot life. Hosted by best-selling author, coach, and speaker Marianne Cherico, this podcast focuses on business and mindset strategies that enable you to create a life and business by design. Now, let's get fired up.
Do you sometimes feel alone while growing your home staging business? Do you know what you should be doing, but somehow don't seem to gain any traction getting the results that you want? Have you thought about working with a coach, but are afraid that this will put you out of your comfort zone? Well, I'm here to tell you that the investment in coaching is the best thing that you can do for your business. When you work with a coach who has your back, helps you break glass ceilings and achieve your goals, gives you business and mindset strategies that are instrumental to achieving success, it's a game changer. Now, how do I know this? Well, I myself have worked with my own coaches, and it's been a game changer for me. And I see the results that my coaching clients get when we work together. When we work together, you'll have my eyes on your business. So if you're ready to invest in you and would like to know different ways that we might work together, let's talk. You can set up a complimentary discovery session where I will help you clarify your goals. Then we'll uncover the inner and outer challenges that might be stopping you from reaching your goals. Trust me, the inner mindset stories can be tricky, and it helps to have a trained coach help you deal with this. And finally, I will let you know how I can help you bridge that gap between where you are and where you want to go. I offer both group coaching and one-on-one coaching, as well as a 6-session masterclass on getting business from real estate agents. You can sign up for my discovery session in the link on my show notes, or go to my website, www.coachingbymarianne.com. So a lot of stagers have been asking me lately about a pay-at-close option, so I decided to dig in. After chatting with a few people in the industry, I reached out to Notable, the leading pay-at-close company in real estate, and connected with Max Kuhl, their Chief Growth Officer. If you've ever wondered how a pay-at-close option could benefit your staging business, this episode is for you. Here's why this matters. When real estate agents are the ones footing the bill for staging, they're often driven by price because it's coming straight out of their pocket. That means they may go with the lowest proposal instead of the best value. But when sellers can pay for staging after the home sells, or even a portion of it, it gives agents the freedom to hire quality stagers who charge what they're worth. And let's not forget, home sellers who want to stage but don't have the funds up front. This gives them the opportunity to invest in staging and maximize their equity. In this episode, Max is pulling back the curtain on how you can use Notable, and I am delighted to introduce you to Max Kuhl.
Thank you so much for having me, Marianne. It's really great to be here and excited to talk with you about our program and about stagers in general.
Yeah, me too. Me too. There's definitely a need for this. When I started back in 2005, this was not happening. So this is
Yeah,
really exciting.
yeah,
So can you give the listeners an overview of how they can work with Notable?
yeah, sure. So first off, just as an intro, as you mentioned, my name is Max Kuhl. I'm the Chief Growth Officer at Notable. I've been with the company for a couple of years and helped us kind of grow from one single flagship partnership all the way to we have hundreds and hundreds of home stagers that we partner with now. And I highlight that to share that our approach is to go to market via partnerships. So we don't really offer our product directly to a home seller or directly to an agent. We partner like with the stager so that, Max's staging company can offer their own sort of unique branded version of our product out to their clients directly. So we are a lender, and what we do is we provide an unsecured line of credit to home sellers to help them defer all of their costs until the closing. As I mentioned, we do that kind of wrapped around a particular partner. And so what we do is We invite stagers to sign up and create a profile, directly with us, create their own account. They get their own unique link, and we can brand it to them specifically as well. And then when the stager is communicating with their client, with their agent, when they're sending their proposal or their estimate out to their client, they integrate our qualification link into that process. And so we make a unique kind of client qualification application process for each partner that we work with. And then they incorporate that into their process such that their clients, basically, when it comes to paying for the staging, they can kind of opt to, hey, I can put this on a credit card, or I can go here and go through the process of setting up a pay at close. So short version is we have a sign up link, which I can share, and we can share kind of after this for people that are interested. Stagers sign up with us. It takes about 3 minutes for them to complete all the information. And then we build a unique custom link for them to use in their proposals and to integrate into their software. And then we do an onboarding call, do some training with them, help them understand the right talk track. We can talk more about some of that language too here. And then we have a support team that helps them navigate exactly how to incorporate pay at close from a messaging standpoint, and then also literally logistically so that they can get their clients through qualified and they can get paid upfront the full amount.
So it brings up so many questions.
Yeah.
Do you offer this to real estate agents as well?
We don't offer it to real estate agents directly. We offer it via brokerage partnerships. So we have partnerships with companies like Compass, the
Mhm.
agency, Redfin, and then we also offer it, to home staging companies. And so we do it kind of via partnerships, but it's either a partnership with a real estate brokerage, so not the individual
Okay.
agent, or it's a partnership with that, staging company themselves.
So is the way that it works that the stager directly gets paid by you guys
Yes.
and then the client pays at close?
Exactly. Yeah. So what would happen is the like I said, we kind of build that unique custom link and client experience for each stager. They communicate with their client, hey, this is our proposal. We're gonna do $5,000. This is what our staging package looks like. You have options. You can either pay for this, with a swipe a card here, or you can opt to defer that until the closing. When the client opts to defer that to the closing, they go through and they qualify, for notable. The client gets
Mhm.
approved, and then they can upload the invoice, the proposal directly, or the stager can do that easily on their behalf. And then we pay the stager that full amount immediately, right away. And then we coordinate with the client and their agent to get paid back ourselves out of the closing.
So you pay the stager right away because I know a lot of times, and I recommend to my coaching clients
Yeah,
that you get paid in full before you
yeah,
do the job because
totally,
chasing money is no fun. And
totally.
after being burnt multiple times, I decided not to be such a good guy. This was years
Yeah,
ago.
yeah.
So the stager gets paid, they can get paid before they actually execute the staging.
Yeah, most stagers that I know won't even put you on the calendar until you pay, right? And that's
Mhm.
a good practice, I think, because it
Yeah.
demonstrates that commitment. And I talked to a stager literally yesterday who was really excited because they do their own kind of version of this, but they do like a
Mhm.
50-50. And so they say, like, you need to pay 50% upfront for me to schedule you on the calendar, and then you can pay the remaining 50 out of the closing. But then they got burned by a couple of clients and actually a couple of agents too. And so what ended up happening is that they were like, we love the idea and the convenience and the optionality, but it's too risky and it doesn't help their cash flow to be able to like do that. And so so what we did is we switched them over to our option. So instead of like charging and just getting 50%, they get the full 100% right away upfront, directly from Notable. They can, put the client on the calendar, do the install, do the work, and then even, cover renewals and things like that through Notable as well. So if the
Ooh.
client wants to extend for a period of time, they simply send us a new invoice, new proposal for that, and then do that disbursement, as well right away. So the whole goal is to get the funds directly to the stager upfront and have Notable handle all of the repayment piece out of the closing.
So the stager isn't liable
No,
once that happens. So, in order to vet the client out, what are the expectations, like credit wise and any other
yeah,
expectations?
yeah, great question. So a little bit of context for because most people don't. I forget because I'm in the lending world. That's all, a lot of these acronyms and things make a lot of sense to me, but then I have to pause myself to help contextualize. But so we're a lender, and what we do is specifically an unsecured line of credit. And what that means is that there's no mortgage or lien on the property.
Mhm.
And and then it's also a line of credit. So it's not like a loan for that full amount. So if you, Marion, like went to go get a loan, you might get the entire amount, right? So you take out a $25,000 loan, you're paying interest on that entire amount of money. For us, the client basically gets approved for an amount and they can use none of it, they can use all of it, they can use part of it. They only pay interest on what they use just during the time that they use it. So we structure it that way to make it flexible so that somebody could pay the first, if they only do, say the contract is for 60 days and it's $5,000 and they then are able to sell and they don't need to renew. They just pay interest on that 5,000. But if they want to extend, they can. Pay another 5,000, they're paying 10,000, they're only paying interest on that 10,000, even if they have access to 50, for example.
So the client, do they have to have good credit, and what does that look like?
Yes, yeah, yeah. So in order to qualify for the program, they'll need there's basically two things that we look for. There's FICO minimum, and then there's equity. And so for FICO, which is basically somebody's credit score, we need a 680 FICO minimum. The reason that we need a 680 FICO minimum is because we're doing this unsecured, which means that it's a little bit more risky from a lending perspective. And so we can't go into sort of what's called subprime or sort of deeper credit profiles. And then the other piece is the equity. We're essentially pulling the funds out of the equity, even though we're not really doing that. But mostly what that means is that we want to make sure that the client can pay us directly out of the closing so that they have enough funds available after they sell
Hmm.
the house and pay off their mortgage, any other liens that they have, pay their real estate agent, and everything, that they have enough funds to pay us back directly out of the closing. So we have an 80% loan to value ratio,
Hmm.
meaning
Hmm.
if the property was a $400,000 property, we can lend up to 80% of that. And so we can lend up to $320,000, like
Wow.
$320,000 of that. Our maximum is 50 that we lend to. But what I mean there is that if they have a $400,000 house and they owe 300,000, on that, we can lend them 20,000, like in addition, because that gives us a little bit of space to make sure that they have that 80 grand that they can cover closing costs, agent fees,
Yeah.
incidentals, and all those other things. We
Do
don't
you run a title search to see if there's any liens on the property, or?
Yeah, so in the back, the client experience is very quick. It's 90 seconds for them to go through
Mhm.
and qualify. In the background, there's quite a lot of technical work that's going on where we are looking at the value of the house. We are looking at we're pulling all the existing mortgages, liens. We surface them back to the client to have them confirm that these are the various mortgages that that they have on their house. And so we're looking at all of that stuff. We're doing what's called a soft credit pull. So we don't do a
Mhm.
hard credit check on them, which is good because it doesn't negatively affect their credit, doesn't hurt their credit score, doesn't show up as a credit pull on their credit
Mhm.
report.
Mhm.
But they we'll do all that stuff on the background. So we'll look at what the list price is that they indicate, and then we'll also compare that to an automated value on the property that we have internally ourselves. We don't get a lot of issues with equity. Most Americans are equity rich and cash poor, and so
Yeah.
the majority of our clients are approved instantly through
Mhm.
that flow. Often the scenarios where they're not approved would be just if they were below that FICO minimum,
Mhm.
or if there's like something that we need to verify. So as an example, we can handle any residential property type at all, but also most ownership structures. And so if it's like the max like Max Kuhl Family Rental LLC, and that I'm the one that applies. Notable will want to check to confirm that I'm actually Max and I'm one of the owners, on that LLC. If it's if there's a POA, or
Mhm.
it's a trust and there's multiple owners in the trust, we might need to verify who those people are. That's the only thing that kind of delays that 90-second, pretty much otherwise automatic, approval process for the client.
So, in order for you guys to get paid at closing, do you have to contact the closing attorney and let them know that there's a lien on the property, basically?
Yeah, so good, yeah, clarification, there's no lien on the property, it's unsecured. And
Oh,
so there's because of that, we just make it really easy for them to pay out of the closing. And so what we'll do is we'll collaborate with the client as well as their agent that they're working with. And seven
mhm.
days before the closing, we'll send a final payoff statement to them to get paid out of the closing. Each state is different. So like in Massachusetts, I think you guys use attorneys. Like there's escrow in other states, they use title companies
Oh,
in other states. And
California,
so it's
yeah,
it's
yeah.
it's a little bit different depending on the location. But yeah, in all of those cases, we'll collaborate with the client and the agent directly and send a final payoff statement so that we can just get paid. Often we're a line item on the closing disclosure that's coming out, even though we're not a lien or any sort of specific mortgage or having a position on the property.
So, you guys are taking a lot of risk.
Yeah, 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 yeah.
Have you been burnt?
Not really, no. I mean, I think it's so for some context, we've been doing this for 5 years. We've done over 35,000 transactions.
Wow.
Transactions meaning like actual home sales,
Mhm,
and issued well over $1 billion in funds to those home sellers. And we have an incredibly small default rate. And the reason that we have that really small default rate is because the use case for the funds is so strong, like towards repayment. And like what I mean by that is that the client is working with a real estate agent.
mhm,
That's a requirement of the program. They're doing work on the house that is like going to lead to a better outcome for that particular
mhm,
sale. And that increases the likelihood that that closing is going to happen. And so what we see across those 35,000 plus transactions, when we look at, and we just did a report on this like last month, we looked at all those transactions, we looked at those homes, and we looked at how quickly those homes sold relative to other homes in that zip code and how much of an increase there was in terms of the ultimate sale price of the house and what the price was on the AVM when they came in initially. And what we saw is 31% faster sale times than average within the same zip code and 9% higher sale price. In a lot of these cases, people are doing, even if they're doing the staging, they're also doing other stuff as well. A little painting, a little touch
mhm.
up,
Yep.
photography, good work on the house. I'm kind of painting that full picture so as to show that the confidence we have in getting repaid is in part based in more positive sale outcomes from doing the investment on the property to prep it well, to get it well positioned. And so it's not just that it's a good use case because it's a real estate agent, because they're proactively doing work, but they're actually often doing a lot of different kinds of work that is leading towards a really positive outcome that makes us feel more confident that we're going to get repaid out of the closing. So we have a minuscule default rate on the loans. That's also why we're able to charge a very, very low fee, both to the staging company as well as to the homeowner. The staging company for accessing those funds, the homeowner for using those funds is because we have a really high repayment rate. Normally, if you were like a company like Notable and you went to like a big financial institution and said, "Hey, I want to go loan $50,000 unsecured to clients," they'd be like, "Great, it's going to be a 50% APR, type product.
Yeah.
It's going to be like an insane huge interest rate to them because there's no
No skin in the
assurance,
game.
that's
Yeah.
gonna be. And so the reason that we're able to lend in the way that we're able to lend is because we've got a lot of history of lending with
Mhm.
successful repayments coming back to us. It's a lot of what, financial institutions look at when they're trying to determine, who they can work with. So when you have tens of thousands of loans out that have all been like really like promptly effectively repaid, you're able to lower that interest rate that you're using to borrow that then you can sort of pass back directly to the consumer. So in terms of what the cost is to the client that's working with us, it's about 1% per month.
That's
They don't pay anything
amazing.
up front. They don't pay anything until the closing happens. The technically, specifically, it's like between 0.7% and 1.2%. The reason there's a difference there is that we vary that rate by FICO. So that 680 is going to be closer to 1.2%, and then it's going to go down as the client has a higher and better FICO score. Technically, we do it as an APR, but because it gets prorated down, it functions sort of rolls out to about 1% per month. Our actual average is even lower than that across the 35,000. But the reason we're able to do it at that number is because of the volume of transactions that are happening and because of the ability to access those funds at a better rate because we have a really great history of repayment to those partners. Clients can cover the staging costs, but then also everything else that they need to do in order to get the home prepped. So that could be things like, and what we see a lot for stagers specifically is cleaning, decluttering, and painting in particular. And so often a client will come in and get approved for the funds. They'll do the cleaning, they'll do the decluttering, they'll do paint touch-ups, they'll get the stager in. We've already paid that stager up front because they needed the funds to be able to schedule. But it's a great system where they get the proposal in, we disperse the funds to the stager right away, same day. The stager then puts the client on the calendar for 2 weeks from now. In that intervening time, they can schedule and set up some fixes, some repairs, some painting, some cleaning, get the house nice so that when they come in for the install, everything looks beautiful. It's great. And then they can go on the market right after that. And one of the things that's unique about our product is that we don't force the client to use a particular like painter or force the painter to go through hoops to like get, a paid for that. If the stager or the agent that's working with that particular client has a particular house cleaner, has a particular painting company, GC, landscaper that they like, they know, they trust, they can use those people, and we can still unlock the funds for all of that. So it's a great way to make sure that we can cover all of the work that goes into prepping a home for sale if we want with these same funds.
So a lot of stagers don't want to kind of act as a GC with
Yeah,
the painters and this kind of thing. And often the real estate agents kind of facilitate
yeah,
that. In my experience, where I come from
yeah,
and from being in the real estate business, how
yeah.
does the contractors get paid for that? Because if the stager says, "I just want to get paid for my staging. I don't
Totally.
want to have anything to do with the contractors." How does that work, and how do the contractors get paid?
Yeah, that's the great thing about it is that we're just the finances, right? And so it's like it's the stager doesn't have to do anything there. What we do is we disperse funds directly to the seller themselves, and they work
Oh,
that out with their agent. So rather than having
okay.
the stager just does their stuff, they want to get paid, they want to get on the calendar, they want an easy, convenient, nice experience.
Hmm.
And what we find is that the clients also have this other work that they want to do. The agent's the quarterback of that, and they should be because the agent
Yeah, yeah.
knows
'Cause they get paid the big bucks.
they get paid the big bucks, but also because they have
Work hard for it, but
yeah, yes, yes, totally, totally. And they also have a good sense of the pulse of the client in terms of what that budget's going to look like, in terms of what they need or are going to need. And it's like, okay, I know the right painter, and we've got kind of multiple tiers of painting that we might want to do depending on the budget and all of that. So none of that is on the stager. The thing that we find beneficial from the staging perspective about the flexibility of the funds is that when the stager speaks with their agents, who they partner with, where they get a lot of their business from, And when they speak with their clients, being able to not only say, hey, Marianne, we offer pay at close at Max's staging company, and that can cover us. It can also cover anything else that you need to get the home prepped. That's a really compelling um,
Yeah.
concept and a really compelling option, such that
Yeah.
now Marianne's going to look at me and go, okay, great. I'm an agent. I've got clients. I already worked with Max a couple times. He did a good job. It's great that
Hmm.
he's offering pay at close because I know that my clients would be interested in that. And it's also great to know that when I bring him in, um, the client can apply for that, get approved, and then also we can cover the painting and all these other like pieces of work. The
Yeah.
biggest issue for clients in getting getting their homes prepped is cost, right?
Right.
There's quite a lot of research about this, um, but it is stress and it's cost.
Hmm.
That's it. Those are the two factors. And there's like it's a whole mile before you get to the third thing that actually
Yeah.
registers for clients. And so agents know this, and so their ability to go in and say, I want to recommend Max's staging company because I know that that experience is going to be better. I know that there's
Hmm.
going to be more options available to my client, both in terms of them being able to pay for it, but then also that there's going to be options in terms of being able to do all this other work that we know is going to actually lead to a more positive outcome, better net proceeds, higher return on investment. And when I go through and recommend Max's staging company because they offer pay at close, because we can cover all these other things, I know I'm not just recommending a stager, I'm recommending a partner that can actually
Right.
in this help me in this home sale. And so yes, it's a great call out. We don't want the stager to be involved in having to coordinate getting other things paid for, anything like that. They have their unique link. Client goes through, gets qualified, they get paid up front. And then, like I said, often what happens is because of that timeline, there's this window of time wherein other work is getting done totally outside of the stager in terms of like helping to get that home prepped. And then we also see some stagers that do more work themselves. So we have a bunch of stagers that also do GC type work. They
Hmm.
design and photography. They
Hmm.
do a couple of other things that can help out. And so it's good to be able to like cover those scenarios as well in the event that the stager also does a little bit of something in addition to the staging.
So let me ask you this, because you don't go directly with real estate agents other than the brokerages that you
Mhm.
work with. If a stager does a consult and they want to just get paid for that, but they have these recommendations that they think that the client should do for the house in order to prepare it, but the client isn't going to do the full staging. They're just going to do the consult.
Mhm.
Is that enough?
Mhm. Yeah. Yeah.
Okay. So you would pay the stager for the consult and then anything that the client wanted to do as far as by the recommendations, because often I only do consults now and I'll
Yeah.
recommend paint colors and I'll recommend affordable updates for vanities and updated hardware, stuff like that. So you would pay me for the consult and then the client could actually benefit from being able to tap into that money. Now, what would it cost the stager to sign with Notable for a property?
Yeah, so there's no cost for a stager to like sign up and have a relationship with us. We charge a fee to access funds. So that fee is 1.5%. So typically, like a credit card fee or something like that is going to be between 3 and 4%. And so it's the same principle where it's like the credit card is facilitating the funds going immediately to to the stager, and that credit card company is charging 3 to 4% in order to access those funds. We obviously can do that same, like give access to the funds right away. Basically, same day we process these hourly, and we charge a 1.5% to get access to those funds.
Okay, so then my question is, it would be 1.5% to the stager,
Mhm.
and that would be you don't and the stager really doesn't know how much that's going to be because they don't know how much they're going to access the funds, correct? I'm trying to wrap my head
That's
around
only for
that.
the staging. That's only for the staging work.
Oh, okay.
Yes,
Okay, so if it
total,
was a consult, it would be 1.5% of,
whatever that,
$500 or
whatever that.
whatever the charge is. Okay, gotcha,
Correct.
gotcha.
Yeah, yeah, yeah.
Okay.
And so we like, so if it's a stager and they're getting their staging work and they're getting the funds dispersed to themselves directly,
Mhm,
we charge a 1.5%. So, um, you know, uh, and then separate from that, there is if a client wants to do all of those other things, they want to paint, they want
mhm,
to clean, they want to do photography, they can get an invoice, a statement of work, a scope, a proposal
mhm,
from those
mhm.
companies, and they upload
Okay,
it to us directly, and we then
okay,
disperse the funds to the client themselves, and then they can pay that person via Zelle, PayPal, check, however they want. So we make it
okay,
flexible for the client to be able to pay for those other services. All the client needs to do, upload an invoice, statement of work, something like that, that shows what that service was.
okay, and then the client pays the 1.5% fee
They don't actually
or
pay any.
or the 1% fee?
They
So it's
don't.
only for the staging that there's a 1.5% fee?
Yes, the client pays the 1% for whatever they use, but in terms of an ACH fee, it's only that for the staging for the
Okay,
stager.
okay, thank you for clarifying that. I mean, it's to me, it's kind of a no-brainer. It's very reasonable. The
Yeah.
interest rate is it's crazy. It's so reasonable. What happens if the home doesn't sell?
So yeah, nothing with regard to the stager. So from the perspective of the stager, the whole point is to pay the stager up front, and then whatever happens after that happens after that, and that's entirely on Notable. From a practical standpoint, it's a 12-month loan, and so like they pay us back out of the closing at 12 months. And if for whatever reason the client can't pay that back in full, we can work to put them on a payment plan for that. Like I mentioned earlier, we have a very, very low default rate because the use case here is really positive towards getting paid back. We do see listing times extending right now because of the market. And so part of the reason why we have a 12-month loan term is to accommodate for that. We've got partners, say in Hawaii, for example, where like
Mhm.
average time to sell is like close to a year already in like a good
Wow.
year, right? And so we want to give the client enough flexibility to be able to cover that. Um, but the um, uh, but yeah, they will pay us back directly out of the closing or at that 12 months if they have not, if for whatever reason it's difficult, we'll work with them collaboratively.
But in any event, it's not the stager's issue. They have no liability.
No.
Um, so last questions. How do you help stagers offer this option? How do you help them
Mhm.
let their clients know about this option? And I know that you offer a lot. So could you tell the listeners about
Yep.
that?
Yeah, so it starts with the onboarding process with us. So we ask everybody to go through an onboarding call with our sort of sales and support team at Notable. In addition to that onboarding call, we do an integration call to make sure that the product itself is integrated into the proposal software and system, so it's easy for the client to access that. And then we also do follow-ups with regard to specific language and messaging. So the core answer to your question is it's training. It's like actual education because this is a little bit of a behavior change and
Hmm.
it is a little different, right? And so we want to make sure that stagers feel comfortable, that they feel like they understand what we're doing, what we're offering, and that they feel comfortable enough to speak to the particular language that we recommend that is like most effective. One thing that I've experienced a lot in just in working with this company over the last couple of years is how deeply uncomfortable people are talking about money.
Hmm.
And
Hmm.
I think for a lot of stagers, it's like they undervalue their work, both like you know, figuratively, but as well as like literally, they undervalue their work by like not charging too much because they're kind of beholden to the agent pumping them up and like demonstrating the value. And then there's competition, and it's hard, I think, for a lot of home sellers to appreciate the value of staging because nobody goes into selling their house with the idea that it's going to cost them money. They sell
Right.
their house because they want to make money. And so you go in to sell your house, and you're like, okay, great. I want to make money off of this so I can do whatever it is that I need to do. And then somebody comes in and is like, okay, great. But we gotta do all these things to actually sell the house. And then all of these things also have like a price associated with them. And I think for even for agents and stagers who work with clients all the time, it's easy to forget how jarring of an experience that is as a home seller.
Hmm.
I like had this experience as a home seller myself, but like, so have more experience on the consumer side in terms of buying and selling than from an agent or staging perspective. But it's really, really important for us on the training side to help our stagers understand and appreciate the impact that that sort of cost conversation is like having on clients. And so we try to train um, around that. We try to confront that head on with the language
Good.
and talk tracks that we use to help stagers be able to more comfortably talk about the outcomes that they're looking for on the one hand, and then also talk about the value that they are bringing, right? And so, like,
Yeah, because they don't really care unless they know what's in it for them. And the value is
yeah,
that you help them maximize their equity when they invest in staging. I mean, based on the stats.
yes,
And so it's an investment. And, you know, I just think to your point, the language that stagers use is really important because there's no way that sellers want to do more work when they're moving. Just
right,
don't. So
totally.
they have to see what's really in it for them. If they think that they're going to make more money on their home and they're going to feel really sure about that,
Mhm.
that's when they'll invest. But if they don't, they're not going to invest. Why would they?
Yeah. And I think it's for stagers in particular, I think it's really important because it's really important with regard to the value concept, right? Because like it is uh part of what pay at close, you know, with Notable in particular, like does is it helps that that stager maintain the price of their
Hmm.
because they have optionality for their clients. And then also we're not like gouging them on the ACH fee, right? It's it's going to be
Right.
half or more than half off of what they would be paying for a credit card or another service or
Hmm.
solution in order to like do pay at close. So the stager gets to save money by
Hmm.
and access their cash right away, right, for the work. And they get to then justify rightfully that their work is valuable. And so if I'm a stager and I'm trying to like justify my value, say, hey, this is what this costs. I do a lot of great work. I have this long, great history. And I also don't want you to feel like that's like an intense, even though it's expensive because it is good quality, I don't want you to have to feel that. And so here is an option for you to defer all the way until the closing. And so it's one thing to come out with in some markets, luxury is luxury. And so the fact that it's expensive is exciting and part of
Right.
appeal for a very, very small specific set.
Yeah.
But for most of the rest of us, for everybody else, you want to say, hey, this is an incredibly valuable thing. We do a great job. And because we do such a good job, we have this high quality, you know, valuable service, and we support that by giving you an option to pay out of the closing. And it can help in particular with stagers that do a great job and have a great service. And maybe they have somebody in their market that is totally undercutting them from a pricing perspective.
Right.
And they can say, actually, like you might be looking at multiple options. And the reason that mine is 5,000 instead of 3,500 is because of all of these things. And with that 5,000, we also offer an option to pay at close. So yeah,
But the other value proposition about that whole thing is that it also it gives the sellers a really affordable option to do the updates that they need to do in order to make it more marketable. I know here in Massachusetts, houses are selling like hotcakes still, but the ones that are getting the most amount of money are the ones that are presented really well, that feel move-in ready. And so that's those are the ones that are creating bidding wars, and that keeps driving the price up. The biggest issue is, do we get this appraised? How do we get this appraised? So I know different areas of the country have different challenges, and it's all about the positioning. If it's on the market for a year, then you position it differently. You say that, this will help it sell faster. In my area, it's all about the money, right? The equity.
Mhm.
Everywhere it's all about the equity. Let's face it, that people want to make the most amount of money they can. Often it's their most expensive investment is their home,
Yeah.
but it's all positioning. In Hawaii, if things are taking a year to sell, then you let them know that, based on the statistics, homes are selling a lot faster when they're staged. People don't want to move into dated homes.
And this
They
is true.
don't.
This is true across all markets too. So like one thing that's
Yeah.
like what that's changed. And I did a webinar for the National Association of Realtors a year ago on this topic. And one of the things that I did was I just did a bunch of research on home prep and different activities. NAR does a bunch of surveys, looked at a bunch of Zillow surveys, looked at a bunch of Redfin surveys, looked at
Hmm.
less surveys as well, and combined a bunch of information. This overall moral and like arc is that home buyers right now like need turnkey properties.
Yeah.
Used to be like a desire. And in some
Yep.
cases, when prices were a lot lower, it was actually like a deterrent because they want to fix it up and do it like themselves. But affordability is a massive issue. Interest rates are a massive issue. Available cash is a massive issue. And all of these things lead towards home buyers needing to have a turnkey property ready to go. And so the houses in my market in Portland, Oregon, that are like house will sell same weekend, like in 2 days, if it is turnkey and it is like prepped and it is staged and it is in good shape. And houses that are not are just on the market for months. And
Yeah.
this is true across the country right now, even among different markets where you have this kind of split scenario of like a staged, good looking, updated house is going to sell, that's well priced, of course,
Right.
is going to sell right away, and something that is not prepped and not positioned well to be able to to be able to show is going to linger. And that's not just this particular market, like this year thing. This is
No,
over
right.
the course of the past 5+ years since the pandemic.
I mean, there's a lot of reasons for that. One is HGTV has influenced buyers. That's one thing. But also, these buyers are paying up to what they can afford. They're paying more than what they can afford because the market's been pretty competitive.
Mhm.
And even if rates are lower, they're still paying up to what they can afford, and they can't afford to update. And the other thing is, they're running kids around, they're busy as anything, they're
Mhm.
working full time, even two parents in a household, and they don't have the time and they don't have the desire. And so it's a psychological thing. They're not, people will say in the older generation, well, I would buy a house and do it over. No, but when we did that, life was simpler. It was
Sure.
just simpler. And, the expectations weren't as high. I'm going to ask you one last question. And it's been really great hearing about this program. My last question is, how, if a stager that's listening to this episode wants to get more information, set up a meeting with somebody, where would they go?
Yeah, great question. So they can go to partner.notablefi.com to sign up directly there. And that will take them to the sign up link. They can enter their information, schedule an onboarding call, directly. They can also just, submit a request to talk to our team to like set up a demo and learn a little bit more there also. Yeah.
I can't thank you enough for your time.
You. Yeah, it's
I
been
really
great.
appreciate it.
It's been great to be here. It's great to talk to you. And yeah, my last call out is I love I love talking about this stuff, and I've really, really enjoyed over the past year as we've built hundreds and hundreds of relationships in the staging network. I really enjoy this space and the people that I've met. So if there's somebody that wants to connect directly, feel free to reach out through Marianne, and I'm happy to talk to them, myself. So if somebody reaches out to you and wants to talk just one-on-one first, I'm definitely available to do that.
This episode of the Home Stagers and Designers on Fire podcast has ended. Be sure to subscribe for more strategies on how to attract your ideal clients, up-level your business, make more money, and still have a smokin' hot life. And don't forget to review this show so that we can continue to bring you top-notch content. See you on the next episode.